Hello traders, hello. This is T-Team Tammy from Landtrend Global Associates. I just want to start by apologizing for being away for quite a long time. And also, I just want to thank each and every one of you all for the support that you've been showing us at Landtrend Global Associates. So in today's lesson, we're going to be more technical. We're going to be talking about how to identify market trends. So by now, you know that the market is always moving in three kinds of trends. It's either we're having an uptrend, a downtrend, or we're just moving sideways, meaning that we're range bound. So without wasting any further time, let's start by identifying our trend. So now we have the US dollar index, as you can see here, and for some time the USD has been losing strength across all pairs. So now if you can look at the left side of this chart, we can see that it's moving to the downside. So the characteristics of a downtrend is that we have lower highs and lower lows. So how do we identify them? Now, we first look at our lower highs, meaning that is the higher swing here. So as you can tell from here, we have this as our lower high, and this is our lower low because it's lower than our lower high. So it's more like a stepping formation going to the downside. So let's clone this. Sorry about that. Now this is our lower low. It's lower than the previous high. That's why we call it a lower low. Once again, we're looking for a lower high. Let's just clone. There it is. Sorry, there it is. So in that order. However, we need to also draw our trend lines to identify whether we're moving sideways, moving upside, or we're just having a downside movement. So in this case, we're obviously having a downside movement. So we're obviously going to draw a downtrend. So when we draw our downtrend, it's similar to how we draw our support and resistance. We use a line chart to identify the swing points. So now we do have our line chart here. Let me just remove this. Remove. Lower low, remove. Yeah. So now we're going to pick our trend line. So when we draw our trend line, we look at those swing points. We actually look at our lower highs in terms of drawing a downtrend. So now, if you can look at the left side of our chart, we have this as our lower high. Remember, and it needs to connect to our second lower high, going to the downside. Okay, we're going to draw it from here. It's more valid from here, from our second lower high, because the trend was established once we produced this lower high and went to the downside. So we're going to draw it from here. So as you can see, the market clearly rejected this downtrend over here, and it tried coming back. What did it do once again? It rejected and went to the downside. So it was quite a strong trend line, and it's still valid today. So now let's use our candles to see if it lines up exactly. You can see that we have wicks around this trend line. So once the market has a counter trend movement, it comes back to the trend line and it rejects, as you can see. Not always, but most of the time. There's no such thing as a short thing in the market, or else we would all be billionaires and all of that. So there's no such thing as a short thing. The market does break above sometimes, but most of the times, in terms of a well-established downtrend or an uptrend, the market rejects or respects those areas. So as you can see, once again, we rejected this level and went to the downside. So in terms of trading them, you wait for the counter trend movement, something like this. Let me just draw it for you. You wait for the movement to the upside. It's acting up. Yeah, you wait for the movement to the upside and a price action signal around your trend line before you can enter into your trade. So we don't enter our trades blindly. We'll first wait for price action signal. So in terms of this one, you can see that we formed a bearish pin bar in terms of our downtrend. Can you see this? We formed, the market tried to break above here, but then because there was a whole lot of selling pressure around this region, it went to the downside and closed below. and this resulted in us forming a bearish pin bar, which shows a whole lot of selling pressure around this region. I wouldn't hesitate to take this trade to the downside, and obviously you can see that it went in profit. And once again, when we look at these levels, they're not exact areas, they're just zones. So same thing as support and resistance, you don't wait for price to come exactly to this level because it's just a zone. Usually I do something like this. So around this zone, something can happen. It doesn't have to come exactly and touch a descending trend line for us to say now the market is respecting that area. Because sometimes there's a whole lot of selling pressure around this region that the market can't make it here. So it just rejects and go to the downside. So yeah, that's how we draw our trend line and trade it. As you can see, the market is still respecting this level. Another great example that the market doesn't have to go exactly there is right here. We had a structure and the market rejected the structure. So the market didn't have to go straight to our trend line and test it. Here it is. You can see, if you can look at the left side of our chart, that the market started an explosive move. This was actually a counter trend movement back to our trend line here. From here, we formed the structure. Once again, the market came close and rejected and went higher to show that this area is quite relevant and significant. So once we broke below, remember in our lesson we talked about it when we were talking about drawing support and resistance, that when support gets broken, it turns into resistance. Another great example here, we have a broken support, it turned into resistance. The market tried to come back higher, however it rejected. Why? Market structure. Broken support, it turns into resistance. So it was our resistance now. The market failed to break above. Can you see this? And it's currently going lower. So now how do we identify an uptrend? Sorry about that. Let's zoom out. The trick here is to zoom out and see the macro picture of your chart. You need to know what the bigger picture is. So looking at the left side, we can see that we have now a higher low. This is our higher low here, and then we have our higher high, higher low, higher high. Remember, when we were talking about a downtrend, we were talking about lower lows and lower highs. In this case, we're talking about higher lows and higher highs. So when we draw our trend line, we draw it from our higher lows. So once again, we use a line chart. Here it is. So identify those sync points and draw our trend line. Can you see how well respected that is? From here, we started out seeing higher, produced a higher high, came back to produce a higher low, went higher, came lower to produce yet another higher low. So our higher lows act as a trampoline for prices to push to the upside. So now let's see if it lines up with our candles. Exactly, it does line up. Can you see how it's respecting these levels? Once again, it came closer, respected, went higher to produce what? Our higher high, exactly. Came back to produce a higher low, which acts as a trampoline for prices to go higher, and it went higher. So that's how you trade and draw your ascending trend line. Now we have NZD-USD. Now it's time for us to identify a range-bound market that is moving sideways. So when we talk about a range-bound market, it means it's moving in between support and resistance. So it's safe now to say that NZD-USD is range-bound, because ever since we started this year, we've been moving in between 0.74 and 0.71. 0.74 is our weekly resistance and 0.71 is our monthly support level. So price has been moving in between these levels. So in this market, you wait for price to come back to your support or resistance before you look at your next trade. In this case, from 0.74, you can see that we produced a huge bearish pin bar, which shows a whole lot of selling pressure around this region. And what happened afterwards? We went to the downside. So let me just show you if we entered into a trade. So if we took a 50% entry of this pin bar, stop loss over here, take profit at 0.71, which is our next logical area if we're looking at a range bound market. So you can tell here that we had a nice risk and reward, 1:3.5. So if you were risking $1,000 US, you're potentially going to make 3,500, which is 3.5 times your one. It's great from an investment perspective. So once again, the market came below here. What happened? It produced a bullish pin bar. So there was buying pressure around this region. Now, what happened? Let's see. You took yet another 50% entry. This is also a pin bar. Take profit over there. Look at the risk and reward now. Look at the risk and reward. 1:5.5. So if you were risking 1,000, you were potentially going to make 5,500. So yeah, my lesson ends here, guys. So if you want more lessons or in-depth lessons about the forex market, you can simply buy a trading course at Line Troop Global Associates. We love you all and we thank you for the support that you've been showing us. And yeah, have a great day.